What's going on, everybody? This is Travis Witherspoon, and this is another episode, or morning episode of Trade with Travis Live. I am super excited to be able to talk to you. If you do not know who I am, my name is Travis Witherspoon. I am a forex trader, forex teacher, owner of Untitled Capital, help you fight for your financial freedom throughout the forex market. This is the first time that we've done a live session in the morning in a very long time, and I'm super excited to be able to go through it because this is going to be a precursor to what we're going to end up doing in the mornings going over the summertime. As y'all know, for the people that have been with me for a very long time, I am a school teacher, so that means that my mornings are kind of taken away from me from 7:15 all the way until right around 3 o'clock. So typically we don't necessarily do mornings. We end up doing basically late evening opportunities and being able to find stuff like that. So super excited to be able to do it over the summer because I have a couple months off and try to be able to learn with y'all, try to be able to make money live and kind of go from there. We're going to end up talking about some big trades that we end up having. I've had one of my biggest trades within using the FX Striker automation system, the FX Striker Max automation system as well. We're going to end up talking about those, as well as being able to find trading opportunities. So if you would, just lock in with me and we'll go ahead and go from there. We're going to end up going for about 35 minutes. Obviously, right when the market ends up opening, we'll talk about that as well. So here we go. Not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that forex trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, you're not promised that you end up making money today. So with that being said, what I'm going to end up doing is taking a look at charts. Typically, I like being able to find stuff in trending markets only, meaning that the market is giving a clear direction about what's happening. And based off of that clear direction, are we in the best ranking to be able to get in? We end up figuring out if we're in the best ranking by taking a look at time frame alignment. Time frame alignment means that the weekly and the daily are trading in the same direction. Once we end up doing that and it follows that step, then we can move to the stochastic and see if the stochastic matches up with the time frame alignment. And then after that, obviously, we take a look at catalyst. And then after that, we end up going through equity management. Now, equity management is the most important thing as we go through and take a look at trades. I end up having somebody ask me a message or send me a message in our last session yesterday. I'm talking about how do you know when you evaluate the stop losses. And that's a great question. And I'm going to give you a quick answer. It's based off of Fibonacci A's, and then after that, it's based off of being able to take a look at your fractals and everything else like that. Once you end up having all the stuff plugged in, then after that, you can use something like a trade ticket, in which today, what I'm going to end up doing for the people that are live, if you would like to be able to get a copy of the trade tickets for absolutely free, all you have to do is make sure that you just sign up to cartercalcapital.com/start here for a free webinar. You can be able to get this absolutely free. And let's say, give you an example, let's say we go with Euro, United States dollar, and we have $5,000 inside of our account. Let's say we only want to risk 2% of our account for being able to place in this trade, then it automatically tells us that we're risking $100. And then from there, you place in whatever that pip risk is. So say if the pip risk is 50 pips and you're going after 150 pips, then the ratio will be a 1 to 3. It will tell you yes that you can be able to take the trade, and it will tell you what lot size that you can be able to place in and know exactly how much your risk versus reward is going to end up being before you end up taking the trade. Also ends up telling you how to be able to calculate your margin, but it also has a hyperlink right here to be able to take you into forex.com's overall margin link. So if you're interested in being able to get this, type in me. For the people that are on live, obviously sign up for cartercalcapital.com/start here. Obviously, do that based off of the honor code when it comes down to that. And be able to pop in. But there you go. Absolutely free for being able to do that if you want to be able to get into that. All right. So once again, that's the website. If you want to take a look at it, obviously you have to do this, be able to place in your information. I end up giving you a call personally, and then after that, we'll go from there. So let's take a look at what's happening today. Today is a Trader's Day. It is Memorial Day in the States, so happy Memorial Day for everyone else. I am in the office, so you can be outside and enjoying your family and friends and everything else like that. I'm going to hit a couple cookouts a little bit later on today, hopefully. But obviously, you're not going to see anything from the United States. So taking a look at United States pairs is probably going to end up being not necessarily the best type of time that we can be able to use. So we're going to take a look at everything else. We're going to end up taking a look at what's happening with the Japanese yen, the pound, the Eurozone, and everything else like that. Obviously, we're going to take a look at indexes because, I trade indexes mainly. But we'll take a look at Bitcoin. We'll take a look at Ethereum and everything else to kind of get an idea about what's happening with the market. But overall, it's a Trader's Day. So taking a look at the charts are going to end up being the most important thing when you go through and take a look at this. So We're going to get through the United States dollar index very quickly. We're going to get through oil. We're going to get through gold. And then after that, for people that are online live, you can type in which pair that you would like for me to be able to take a look at. And obviously, we'll go through that and I'll be able to answer your questions as we are doing this along the way. Um, Give me 1 second. Let's see. Because I'm streaming this live with I'm streaming this live on YouTube as well. So I want to make sure that want to make sure everybody has their questions in if they have any pairs that they would like to look at. Let's see. Any pairs you would like to talk about? Okay, so I'm gonna pin this up halfway on the screen so I can be able to take a look at that as well. All right, so here we go. I streamed Japanese yen. We took a look at that yesterday. I absolutely take a look at that. I want to see exactly where it was. I said yesterday in our live session that I felt like between that and pound yen, I thought pound yen was going to end up moving a little bit faster to the upside, but I also feel like Australian yen is probably going to move to the upside as well. So we'll take a look at that one as well. All right, so United States dollar index very quickly. Market is coming out of the sell zone and end up hitting the D extension at 12,661. They ended up happening about 4 weeks ago. Since then, the market has broken the inner trend line. It's moving toward the outer trend line. And because it's moving toward the outer trend line, the market is short-term bearish. Now, with that being said, because we have a fractal high, we should be looking at a new fib. And right now, I don't see the new fib, so I'm actually going to create one. We start off at the fractal low, which is at this point, go up to the fractal high, which is basically where the extension ended up completing. And currently, right now, we can see that the market is in the middle of the 236 and 382. Anytime that the market is in a R5 trade, meaning that anytime that the market has completed the extension and now is looking at being able to retrace a little bit, we're going through the phase of not A to B or C to D. I mean, not A to B or C to D. We're going B to C. We're basically going in that retracement phase. I'm actually going to draw that out on the chart real quick so everybody can be able to see. So A to B is basically a rally phase, especially in an uptrend. That means that people got in a low price, started to be able to buy it to a high price. Then after that, you got B to C, where the market is basically retracing. Now, typically, I tell people not to trade inside of this area because you're not necessarily going to end up getting the greatest trades in the world when it comes down to that movement. What's going on, Casey? I hope everything's going well. OG is in the building. Um, but when you end up taking a look at this movement, the movements that I like to be able to get in is C to D trades. Obviously, we talk about R2 and R3 rankings. Your C to D trades actually start when this market has that big U-turn and be able to go in from there. So essentially, the phase that we're looking at right now as this market is basically moving down is we're going through this phase right here. So really and truthfully, if you don't catch this trade early, it's not necessarily the greatest trade to be able to get into just because of the retracement and not knowing when the market is going to potentially turn around. So essentially, we know that the market is short-term bearish, but currently right now, is there a great position to be able to get into? Currently right now, I will also end up saying no to that because the market is in the buy zone based off of the stochastic. We know that the weekly and the daily are trading the downside, but they're not necessarily in the greatest position to be able to make a move. So currently, right now, United States dollar index, I'm going to stay away from it. Obviously, we know that the market is going to end up being slow today, so I wouldn't expect anything less. Now, taking a look at oil. Oil from a weekly standpoint, the market is basically turning bullish. I expect that oil is going to end up getting up to $171 a barrel long term. So we're going to end up taking a look at Canadian dollar pairs overall as well today's session and being able to take a look at that. We can see the market is breaking out of this consolidation angle. We talked about if you end up trading this outside of the triangle, you could have caught the market a little bit earlier than what everybody else is looking at currently at this particular point when the market was right here. But we take a look at this from a 2-hour perspective. There's a quick thing that you can be able to do overall when we're taking a look at this. We see that the market is just coming out of consolidation. Let me zoom out a little bit so everybody can be able to see it. We know that the market is coming out of consolidation. We have a breakout. Anytime that there's a breakout of consolidation, then after that, there will typically end up being a retest. That retest has happened a couple times in this area. Now, is it a great retest? Not necessarily, but you put a trend line right here and wait for the market to be able to break to the upside, you may end up having some big movement that may end up happening overall. Once again, because the market is somewhat slow, and I don't see the market necessarily moving. Oh, okay, now I see it moving. it may be one of those situations to where this would be a slow, drawn out process, and you can be able to get in whenever you necessarily want to. So um, I'm looking at oil for its pairs, but I do expect for the market to be able to basically retest first, and then after that, be able to push back up in the near future with this market basically making a move to the upside. So right now, I'm going to wait until the 2 hour gets into the buy zone before I end up doing anything, and then after that, then I'll start taking a look at a pair. But trading it at 9:30 currently right now is something that I'm not going to do because it's not ready yet. Let's take a look at gold. Gold, we've been in this pair for a while. Expecting movement to the upside. I got in at 1852. Currently, for people that I ended up talking to yesterday, you end up catching the market right when it started to pop up, right around 9 o'clock last night. You had an opportunity to be able to get in as well. This is one of those moves that I really do like. We can clearly see that the market is in the buy zone based off the weekly. We can clearly see that the market has broken the counter trend line break toward the upside. So going back to what we ended up talking about for the Fibonacci movements, right? Let me get off of this real quick. I'm going to draw this out real quick. So there goes your A to B movement. We know that A to B in this case is a rally. From there, you end up having a retracement where the market ended up pushing to the downside. And we had a deep retracement this time. Because we end up having a deeper retracement, the U-turn that we may end up having may start off being very slow. And then after that, once people start to get in, then it will start to gain a little bit more steam and go from there. So currently right now, we're looking at it. We're basically like in this phase right here where the market has started to be able to make a U-turn and has broken a counter trend line break, in which that's where that purple line comes in at, that you're looking on my chart, where you end up seeing that. Essentially, that is what's happening right here in this case as the market is starting to push back up. So this is giving you a lot of opportunities to be able to get in. Remember, from a stochastic perspective, that means that from a weekly perspective, the market moving from the buy zone to the sell zone is going to end up taking about 7 to 11 candles. In this case, you're talking about 8 months. I mean, you're talking about 8 weeks, 7 weeks to right around 11 weeks for the market to be able to move. So 2 to 3 months of overall bullish movement, meaning that we're talking about at least over the summertime until mid-August, that this phase may not necessarily end up ending until. So definitely this would be a good chance to be able to start looking at being able to buy on this one and being able to make moves on it. Now, overall, what is happening is this: the market is in the sell zone, but we see the market start to push back up to the upside. I don't know if that's a false break because the market is not open for the United States dollar, but I do see a counter trend line break. And for some people that are not necessarily in, this is something that you have to pay a lot of attention to, because if the move is ready to go, even though you may not like that the move didn't necessarily go to the position where you think that it may end up going, we do see a bullish Morningstar candlestick. So this is one of those positions that I would say, yeah, let's look at being able to get in. In my case, I'm already in. If you are a person that is trying to get in order to be able to save yourself a little bit, especially if you're just trying to scout the market instead of trying to buy the market all the way up to 2,100, in which that's what I'm trying to do. What I would end up doing is, I know that the 2 hour D extension is at 1887. That will end up being the short-term take profit level for this overall position. Currently, the market is at 1859. You look at how many points it actually is in this particular case. You're talking about over 283 points for it being able to get in. Everybody, give me 1 second. My wife is sending me a message. Let's see. Let's see. Okay. So we're talking about 280 points. So to give you an example, let's go ahead and pull this up in the FMA and kind of get an example about what's happening with that. Take a look at gold. Let's say I got $2,000 in that account. Let's say take profit. We said it was 280 points for us being there. We know that the market is going up in both directions for the weekly and the daily. The entry rank will end up being an R2. Is there a counter trend line break? Yes, there's a counter trend line break that just happened. It's a stochastic in the buy zone. Yes, it is. And obviously, if we end up taking a look at, we got to look at one more thing. Let's see. We got to figure out what the stop loss is going to end up being. Now, You can do this two different ways. One, you can place your stop loss below the A. You can place a stop loss below the A in this situation. The risk reward is not going to be there, and you're not going to like the trade, and no one is going to end up taking it. However, if you end up placing your stop loss right below this swing low right here, which is at 1840, basically you'll be just below all of that movement that just started from that U-turn. So you can place it at 1838, which would be 213 pips. 213 pips will make this a one-to-one trade. So this would be more of a scalp if you're interested in being able to do that. If you want to be a little bit more aggressive, then you can place your stop loss just below the area where it actually ended up breaking, or somewhere in the middle of the area where it ended up breaking, saying right around 136 points, which will end up being at 1845, and give yourself an opportunity from there. I'm going to show two different examples of it. Let's see, if we go with 145 to 280, we end up saying that you could not enter that trade based off of that overall movement. I'm going to be very discretionary when it comes down to this because it got a lot of stuff that's going on for it. So what I'm going to do instead of raising my percentage for it, the highest percentage that you can be able to get and be safe, I'm going to lower it down just a little bit because I'm probably going to end up taking this trade. In this case, I'm going to say $5,000 just for its example because obviously my account size is a little bit larger. But in this case, once you place all that information in, you got 0.70. It's a lot size that you can be able to place in. So two different stop losses that you can be able to work off of. One, if you want to be a little bit more conservative, you can place your stop loss just below 1845 and be able to go from there with a take profit of 1887, and that will be your risk reward factor for us being able to get in. You want to be way more conservative when it comes down to that. Don't care about the one-to-one risk reward ratio. You can place it below the swing low at 1838 and give yourself obviously the ultimate chance of being very safe when it comes down to that movement. But while I'm plugging this in, there you go. Here goes your risk versus your reward right here. If you're going to end up making this move from there, just from a 2-hour perspective. Now, you want to go based off of the daily, and let's say you want to have multiple trades in. Let's say this is take profit one from those overall positions and being able to get in. If you want to go based off of the daily and be able to have that same type of movement, the daily movement in this case, the daily movement is a little bit higher, in which take profit will end up being at 1920. Obviously, if you go 1920, then that means that you're going to end up getting more of a points from that. That'll end up being 618 points. So obviously, it will definitely end up fitting for its risk reward from there and being able to do it like that. And I would actually raise my lot size to 3% and be able to go after that, meaning that you're risking 150 to be able to go after $640. So that's one of those things to be able to do. For me, I don't know. I may end up adding on. To this trade. Got to see what the 15 minutes is doing. But you got two different take profit levels, or you got three different take profit levels. First take profit level is at the 2-hour D extension. Second take profit level would be at 1920. Third take profit level, if you're going to risk and be able to ride this all the way out, in which you definitely can. Take profit level will be at 2012 for the long term take profit position. Obviously, with those same stop losses. So, obviously, being a little bit more patient will allow you to be able to get that same type of movement from there. So, there we go. First trade of the day that we have an opportunity for us being able to get in. The market is starting to move already. So, if you have not gotten into that move as of yet, I would say start looking at being able to load yourself in because there's a true counter trend line break. The market has already started to move. Obviously, we're seeing everything kind of go from there. I'm already in this trade. So, that is an opportunity for everybody else that's watching live to be able to make a decision on what they're going to end up doing with that. So there we go. I'm going to leave this up here for another minute. If there's any questions, obviously we'll go from there. But we will start off with Australian Japanese yen as one of the obviously one of the picks from the people that are live, and then after that we'll keep on going through Bitcoin and everything else like that as we go through. All right, but once again, stop loss, you can place it at 1845. You want to be a little bit more safe, you can place it at 1838. Take profit one will end up being 1887. Take profit two will end up being 1912, I believe. Let's go back to the daily. Take profit two will end up being 1920. Take profit three will end up being the weekly, the extension at 2012. There we go. So good to go. All right, that's placed in. Let's go Australian yen and take a look at that real quick. Australian yen, we ended up talking about this yesterday. Obviously, I don't remember putting this stuff in there. Let's go back again. Let's take a look at a different chart. Maybe it might be a different one. Okay, I'm gonna start all over again on this one. Um, for some reason, it's kind of weird. All right, so here we go. Look at this movement. First thing for people that have never traded before and you just want to go through technical analysis, kind of get an idea. I'm going to look at the weekly, and then after that, I'm going to look at the daily. The weekly is going to end up telling me what the overall direction is, and then after that, the daily is going to tell me what trading zone we're actually looking at. So first thing that I'm going to end up doing is taking a look at the field and take a look at the fractal low. Once I end up taking a look at the fractal low, it'll tell me what phase we're actually in. We are in the second field of this overall movement. Based off the second field of this overall movement, we can see that this market has retraced down to the 382, so it is considered to be healthy. And we take a look at what's happening for this overall movement. We do have a counter trend line break to the upside. So, Casey. So, I'm going to say the name wrong. So I'm just going to say Kai. Obviously, we have the movements to the upside that you actually kind of look for that movement up there. Long term, the extension is at 110.08. So keep that in mind. Let's see. So that at the long term take profit level. I'm going to put that in as text because I am kind of interested in being able to see that. The market's going to open in a couple minutes, so we'll take a look at that as well. Let's see. A weekly EP is 110.08. Okay. And currently, right now, we look at our ABCD phase. Essentially, what we're looking at is right here: A, B, retracement to C. We're in the extension phase right now as the market keeps on moving. Yeah, I hope so as well. I mean, obviously, that's the reason why we do all this hard work, Casey. We want to be able to make profit off of it. I'm going to talk about what I ended up doing for NAS 100. NAS 100 ended up making over $7,000 this morning. It's been over. It's a 3-day trade. Obviously, we talked about the trade over the weekend. We talked about the trade in the Wednesday session. Market ended up actually triggering in on the automation system. On Thursday, and on Thursday, and then after that, completed the move yesterday while I was asleep. So it's always good to wake up and be able to have new money in your account. Nevertheless, to be able to say. But we take a look at the daily. Market broke the counter trend line break finally. We have this essentially what was happening with this overall move, what the market was trying to bounce. It finally ended up breaking out. Remember, when there's a breakout, typically they'll end up being a retest, and then after that, push back up. That's the reason why we look at the stochastic. We see the stochastic is in the no trade zone for its overall movement. So we got to be a little bit more careful when it comes down to being able to make a decision off of this movement overall. So we're going to go on the 2-hour fibs and take a look at that and see what the market actually is on this pair. We take a look at 2-hour fibs. We can see that this is your fractal low right here for your 2-hour. So I'm going to place in a sub fib at the 2-hour and see what's happening. There's a D extension for a scalp move up to 92.88. Casey, I think you end up saying that your take profit is at 93 on this one for the short term move. If I do remember right from yesterday, you may end up seeing that the market may end up pushing up to 92.88, and then after that, starting to retrace faster before you actually end up getting that move, before the market may end up completing. So just keep that in mind. We do have strong support. We can see that the market end up bouncing off of this area and being strong support. But I don't know if this resistance right here, that resistance right there is going to end up being a strong retest area, if I'm just being very honest. But it's only one way to find out. You got to let it play out and be able to go from there. So there'll be the retest area in which I would think that if it gets back to that area, you can be able to see it. All right, so we have our breakout. If you're not in, I would not tell you to get in because the market is in the sell zone based off of the 2-hour. what I would end up looking at is being able to see if the market is going to end up having a little bit of a retracement. Let it get into the buy zone, let it turn past resistance in a future support right around here, right around 91. And then after that, see the market start to pop back up to the upside from there. So currently right now, I would not personally do anything, but I do have a bullish bias off of it. Entry at 91.04. Take profit at 91.88, 2-to-1 risk reward ratio, stop loss of 141 price, target at 93.82. Okay, I remember that from yesterday. But yeah, pretty much in the same position what I ended up saying yesterday. The market broke out and waiting for a retest. Once that retest happens and the counter trend line break happens, hopefully in the buy zone of the 2 hour, then after that you got a trade to be able to take. Currently right now, I'm not going to do anything off of that yet. I like gold's trade better than what I see with Australian yen, just because gold is showing me that it's ready to go now. So there we go. Let's get off of that one real quick. Let's take a look at since the market has opened up, we'll take a look at US 30 and Nas 100. Then after that, we're going to Bitcoin and everything else. US 30. I have a lot of stuff on the chart, so please forgive me. But I'm just going to talk. I'm going to talk through it. So, market broke to the downside. Once it ended up breaking to the downside over the course of this last few weeks, ended up hitting a very low point of 30,750. Once the market ended up pushing up from there, ended up having this large engulfing candlestick. As we speak, I'm going to erase this real quick so everybody can be able to see it. We end up having this large engulfing candlestick right here that ended up covering up about 3.5 weeks of movement. Now, remember, when a candlestick formation ends up creating its actual movement or creating that actual U-turn, the next candlestick, which is the candlestick that we're looking at right here, typically is going to end up retesting the body of this candlestick movement before ultimately starting to push up. So the rule has always been, if you end up getting into a candlestick formation, your stop loss has to be below the swing low of that movement to be safe, to allow the market to be able to retest a little bit, and then after that push up to the upside. Type in a Y or yes if that makes sense for people that are watching live. Typically, that's the overall movement. Now, with index pairs, because the market moves so violently and so fast, sometimes being able to place your stop loss down here, unless you have a lot of money inside of your account, it's not necessarily feasible for everyone to be able to do. So, with that being said, we take a look at this from a daily perspective and everything else. That should help out for being able to allow us to be able to get ourselves into a better position. Let me undo everything because I would like to be able to see my chart again. Here we go. So this market is kind of in the same phase as what's happening with the United States dollar index. Remember, the United States dollar index ended up breaking the extension to the upside, and now it's expected to be able to fall. Dow Jones has failed and hit the extension to the downside. Now it's expected to be able to go up. So they're basically just working in opposite directions, but doing the same thing. So we take a look at this from a daily perspective. From a daily perspective, because I knew this market was going to end up making this U-turn, we ended up getting in based off of a 2-hour counter trend line break for our manual trades and for the automation system. The automation system went through its own rules and basically got ourselves into that trade to the upside as well. So the market is bearish to the downside, but if you take a look at the current direction of the daily, is bullish to the upside. So if you missed the first move, I would say stay away from this trade, because that was a R5 type of move, which means that essentially it's a very low percentage trade unless you end up getting into the first wave of the movement. And what I mean by the first wave of this U-turn is that we end up catching this trade last week where this market ended up making this movement right here. A to B, there goes your C. The market completed the extension at 32,783. So if you end up getting into that movement, that is the original movement or the R5 trade that we end up taking a look at. Currently, right now, the market ended up reaching a peak 33,436, and then after that, currently right now, because there's no fractal high as of yet, even though I place this up here, the new fractal high will actually be up here, especially if this next 2 hours for candle movement, we end up getting a new lower low. And then after that, we can truly be able to see where this market's going to fall. Now, keep in mind, point control, we take a look at volume. Point of control is all the way down at 32,000. I don't expect that it's going to drop 1,200 points to the downside. What I do see is that this market has a pivot level right around here that I would like to be able to take a look at 32.6. And 32.6 is 382 of that movement from there. So that'll be the next area that I'll look at being able to possibly get back in at when it comes down to US 30. Until then, I'm just going to let the market basically retrace and be able to fall. And then after that, be able to make its next move. So US 30, nothing to be able to do for us that one. Let's take a look at NAS 100. NAS 100 is where I end up making the bulk of my money this morning for its overall movement. It's basically showing the same thing for this movement overall. And I want to find pairs that I can actually be able to trade. So I'm going to be able to, I'm just going to go through this very quickly. Market, same deal, broke a movement to the downside. The D extension on this one's at 10,760. So the move has not completed yet. We have that same bullish engulfing candlestick movement right here. We take a look at it from a daily perspective. Obviously, the market is down and going to the down direction for the long-term movement. We can clearly see that with all of our indicators and basically telling us that. But the daily is going to the upside. So once again, that's not necessarily a trade unless you caught it right at the extension of a daily field and been able to make a move from there. So what I ended up doing on this one was that from a 2-hour perspective, right when it gave us that counter trend line break U-turn, I ended up getting into the market based off of this counter trend line movement, right? Let's see. I end up getting into the counter trend movement right off of that move right there when the market started to push up. And then after that, rode it all the way up to 12,434 for my manual trade. And then after that, 12,700 for my automation system trade. So this market, same deal, has not completed a fractal high, so you cannot use a field to be able to take a look at it. It's breaking out towards the inner trend line, so that means that it's going to gravitate towards the outer trend line, and more than likely what will end up happening if the market makes a new lower low, this will end up being your new field to be able to pay attention to. What I will end up doing is just waiting until the market actually ends up making a new fractal high. If you're going to scalp the market all the way down to 12,380. Me personally, I would not necessarily recommend that, even though I know that the market is going to the downside. The weekly and the daily do not have time frame alignment. So nothing necessarily left to do on this actual pair until it actually ends up having a retracement and starting to push back up and being able to go from there. But just to be able to talk about that, obviously, the last 3 trades that I end up having on this movement, which are down here, we end up getting in on 527. Market ended up hitting take profit 1 at, let's see, take profit was at 1238, 12,560, and 12,855 respectively. Obviously, you can be able to see that we end up making $7,500 on that last trade based off of that last movement from there. So there we go. Let's see. What are some other pairs that y'all like to take a look at? Obviously, we're going to take a look at Bitcoin real quick, but what are some other pairs that y'all like to be able to take a look at real quick? I'm really trying to trade today. So obviously, I'm going to go through the ones that I typically go through, but I am trying to get something that we can be able to trade off of. Bitcoin from a weekly perspective fell down to support. Support has been right around 29,000. It has fell as low as 25,000. There's a D extension for this move. It's fell as low as 28,000. The extension is at 12,800. 24,800. The market is moving or basically showing signs of being able to hold at this support level, which means that this may be one of those areas where a lot of people may start looking at being able to load up at. We take a look at that from a daily perspective. We see that the market fell down and hit this yellow support. And then after that, started to be able to make its push up in the same way. Gold and silver move the same way. Sometimes. Silver is a little bit more volatile when it actually has its movements. You know how you look at gold and you see that gold kind of stable throughout months and everything else like that. In those same months where gold may end up having like a minimal move, silver will end up having like a strong move to the upside or a strong move to the downside. So it can be a little bit more volatile, but typically they do move in the same price, or typically they do move in the same level. So market ended up pushing up. It ended up rejecting off of this resistance. The high was at 31,000. It ended up rejecting off of that. Since then, the market has fell down to 30,425, and it's basically in the middle of this overall area. As long as the market is in the middle of this consolidation area, there's no trading for me. I am in a sell trade off of a hedge. Don't know what a hedge actually is. Hold on, let me pull it up and let me see where it's at, because it's been a while since I looked at it, because I have a very low stop loss on this one. Or very high stop loss on this one. Let's see. Um, Actually, I got kicked out of my trade on Bitcoin. Let's see. I got kicked out of my trade. I made money off of it, but got kicked out of my trade at where is it? 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 I got kicked out of my trade when the market went up to 30,870. So took a loss on that one today, but it was very minimal loss of like $80 or something like that. So not necessarily worried about it. We'll look for a better position once this market breaks out. Um, so Bitcoin, nothing really to do. I'm not going to waste any more time on that one. There's nothing really to take a look at. Let's go with Ethereum real quick. Ethereum pretty much in the same position. Take a look at it from a weekly perspective. Market is there's a D extension at 956. From the weekly perspective, the market is moving down and it's falling down to this natural support that Ethereum and Bitcoin kind of has, or basically been showing the same movement. So we're seeing a lot of buyers get in at this point because it is a support. And take a look at it from a daily perspective. 3 days ago, the market ended up bouncing off of, let's see what number this was. Market ended up bouncing off of 1700 or 1703, and then after that started to pop up. So it's up. Is up a few percent when it comes down to that movement. But currently, because we don't have a true fractal to be able to work off of, there's really no movement on this one as well. The only thing that we can look at is consolidation. If we would have bought that consolidation support, then you would have been okay. So Ethereum, nothing really to do on that one as well. So I'm going to get off of those. Let's see some more trading opportunities. I know that I'm running a little bit long, but let's take a look at what happened with DAX. Let's see if anything happened with DAX real quick. DAX, if you're not familiar with it, is German 40. And some brokerages it still may be German 30. Let's see. Weekly movement. Market's moving to the downside. Now we done had a new higher high. Market is starting to push back up to the upside. So maybe that might end up being the bottom for DAX when it went down to 12,500. Currently, right now, we end up taking a look at this. We broke a counter trend line break to the upside. So I am going to end up saying that the weekly is starting to be able to have a U-turn and starting to be a little bit more bullish. Market fell all the way down to the 618 and then broke it to the upside. So this is one of those R2 type of movements. So essentially what that means is you look at the ABCD pattern. There goes your A, there goes your B, there goes your C. Had a deep retracement. Market is now starting to break the trend line and starting to push up to the upside. There's a D extension at 16,435. That is another position that can end up being completed for the D extension from a weekly perspective. Doesn't mean that it's going to end up happening this week or next week or anything else like that. It just means that we have a new move that we need to pay attention to. Okay, so with that being said, the weekly, from a long-term perspective to the downside, but we can clearly see a higher high. So I'm going to consider that being bullish. I'm looking at the daily. I'm going to consider that being bullish. We can start to see that the ribbon is actually starting to turn green as well, but we don't have all of the factors that are telling us that this market is ready to go, right? We see that we look at our trend meter, the trend meter is green, but we look at our Don chain, the Don chain is red. So it's not ready to be able to go as of yet for us being able to fully break out for this movement and being able to jump in at this particular point. Maybe a little bit overreactive, because more than likely what you end up seeing based off of the daily, we'll go to German 40 on the stochastic. You'll see that it's a little bit overbought as well. Okay, so um, currently right now I'm going to wait. I'm going to wait on German 40, just like I'm going to wait on all of the other pairs. Essentially, what I'm looking for is that I want the market to be able to fall down just a little bit, possibly end up falling down the point of control at basically at 14,000, and then after that, hopefully be able to pop back up and go back up to the upside. But I'm not going to chase it right here, and I'm not going to sell it now because it doesn't make any sense to sell it right now, even though the trend has been bearish. I do see a higher high, so I'm going to respect that and expect that the market's going to keep on pushing bullish after it retraces. So going into today, going into tomorrow, I do expect that the market's going to end up falling down. I expect that it may end up falling down about 500 points before being able to push back up to the upside for its movement from there. So nothing to really do on that pair. Um, okay, so I went through the pairs that I typically end up going through. We talked about Canadian dollar. We talked about the Canadian dollar and being able to look at some opportunities from there. I'm just going to go through some brief charts real quick and see if that may end up being a quick opportunity. But we do have a trade on gold, right? So we talked about gold being able to buy. Let's go Canadian yen real quick. Canadian yen broke out its long-term consolidation to the upside. We have this. Let's see. Get this out the way. Get all this stuff out the way. Got it. So with a new swing or a new field in this case, market has broken to the upside and broke the B without falling down to the 382. If you're familiar with that, then that means that we're looking at an 80-20 rule, meaning that this market may continue to break up to the upside, but it's probably going to end up finding a little bit of resistance right around the 127 position. The 127 extension is at 104.36. So I do expect that if the market gets up to 104.36, that you'll probably end up seeing a few people um, start to get into this market and really start to push down on it. Or you start to see a lot of sales that may end up happening right around this area. Okay, so just keep that in mind. Either way, there's still 400 points of being able to move to the upside if you can be able to catch it. So we take a look at it from a daily perspective. We can clearly see that the market is to the upside. We can look at the daily and see that the market is to the upside off of the daily, even though it's not necessarily in the greatest position for it to stochastic. All that means is that instead of treating this as a swing trade, you have to treat it as a scalp and be able to go from there. If you're looking at it from a 2-hour position before it's being able to trade it, we can look at subfields and then after that be able to make moves from there. So the subfield that I will look at will be right here. Let's see. There was your field right there from the subfield right there. Okay. That swing was broken. Take a look at this swing right here. The extension has been completed. Okay, so with that being said, until we end up getting a fractal high, there's really no movement to be able to do from there. All of the Japanese pairs had the same type of movement. You're waiting for some type of retracement to be able to push back up. So not looking at any more Japanese yen pairs because of that reason right there, because they're basically showing the same thing. Not going to look at US CAD because we already looked at oil. I think this is a good stopping point here. We'll just wait until tomorrow, see what we have for the opportunity, and then after that, be able to go from there. So what I'm going to end up doing is ending it off right here. If you like what we end up doing, please make sure that you end up clicking on the like button. Please make sure that you end up, hopping inside of our trading group and everything goes like that. By going to cartercalcapital.com/start here. Sign up for one of our free Fibonacci fundamentals masterclasses or free Fibonacci fundamentals webinars that we end up talking about. If you're interested, be able to hop inside of our master classes and our boot camps that we end up having. Typically, we do our boot camps from every Monday through Friday, but we end up having 5 different topics that we end up talking about. Get you set up when it comes down to your brokerage. Get you set up when it comes down to everything that we do with our automation system, with our equity management system, and everything else like that. Casey, thank you. I do appreciate it. And being able to go from there. We're going to do this again. We're going to do this again on Wednesday. Remember, over the summertime, we're going to do this every at 9 a.m. to about 9:30, 9:45 each and every morning to be able to find different trading opportunities. So please tap in with us. Make sure that you end up sharing that stuff over along the way. If you end up trading with us for the last week, currently right now, we are 4 out of 5 when it comes down to the last few trades that we've done over the course of the last 3. That includes what happened with gold. That includes what happened with US 30 and NAS 100. That includes what happened because we already done took profit from gold before. That includes what ended up happening with there's some other pair that I'm forgetting right off the top of my head. So I'm going to stop rambling. So like always, make sure that you end up planning your trade. Make sure that you end up trading your plan. I see each and every one of y'all a little bit later on today. For the people that are in the States, happy Memorial Day. Get ready to go pick up my boys, and hopefully we'll be able to have a nice looking cookout or a nice cookout to be able to go to and be able to go from now. Everyone, take it easy. See you later.